All right, everybody. Hey, thank you for joining me. I'm excited to talk to you today. We are launching a brand new indicator, a brand new series, a brand new trading room for you that is going to teach you to trade confidently and scalp for high profits and low drawdowns. That is our goal in this channel. And we're using a new system called the Lion for our entries and for our exits and for our risk management. It's all in one product that's going to help you scalp profitably. So let's take a look at our chart here. Zooming in, you see a number of horizontal lines, and you see these channels that are above and below a yellow midline. This is the new system we call Lion. Lion is comprised of two indicators mashed together. An old one that I developed way back in 2007 roughly. It's called Extension 62 Lines, and another one that's brand new, just launched recently, called Leto Channels. Well, if you want to trade futures confidently and scalp them confidently, you need two things. You need to know truly when a market is overbought or oversold. It's not just speculative based on a short range or an RSI or a breakout of some trading range or session, like opening range. You need to know when the market reaches its historical extensions, its historical overbought, oversold levels. Think of it this way: when a market is trading around a 100-period moving average, put a 100-period MA on your chart, and you'll see the market snake back and forth around that average. Well, we can look at it historically and determine how far does the market move away from the moving average before it returns or before it slows down or at least goes sideways. When does it reach an overbought, oversold level? We use historical data for doing that. So Bollinger doesn't use historical data. Bollinger uses current market data, right? It's one of the reasons why it's a little laggy. So as the market expands, the moving average moves, and we have the volatility bands in Bollinger expand on current market data. Well, we don't use that as Leto channels. We use historical data as a fixed point reference. Now we can determine when the market hits those historical distances. So that's the first thing you need. You need a good overbought, oversold indicator that uses science and not just random current market activity. But second, you need an entry point. Now, we all know that swing points are good support and resistance levels. Here is extension 62 on this gold chart. You'll see that we've identified blue dots on the relevant swing points. The indicator does that for us automatically. So that's our entry point, and that's our stop loss. In this case, we had a strong move downward in the morning at 9:30. We hit this level, bounced back up. We found a new low just slightly below the prior low. And we're going to go on that reversal off of that bottom. We're going to buy when price hits back up here. So we buy right at this point. Let's put a marker on there. I'm just going to put a dot. We bought right here at that point, and we held on a conservative distance. Now, we didn't go crazy here. We bought here, and we held right until we hit that first extension line. That was a $710 move on one contract, so it's not too shabby in gold. Now, I do want to let you know we had initial risk. Our initial risk was down to this point. Initial risk was 1320. Now, I would never advocate you letting a market retrace $1,300, but that is the suggested initial risk placement. I would quickly suggest you move this up as prices accelerate and move in our direction. So it might even be the first bar. We have now cut our risk down to 430, and I would keep that in there. Since we're doing a very short scalp, this is only 71 ticks. Now, the market expands, the distance in the target expands because our market volatility is expanding. So you might not technically call that a scalp at 70 ticks. But based on volatility, that happened very, very quickly. This happened in just 8 minutes. We had entry to exit was an 8 minute hold on that contract. So let's take a look at that. So again, what you need is you need a overbought, oversold level based on science, and had you gone short right here at this level, we got faked out, right? The target was down here and the entry was here. The stop is up here, and you went and got your full stop loss if you had gone short here. Well, there's a reason why we filter that out, and that is the oversold nature of this market at this time of day. These diamonds that you see here, they're not placed manually. Those are placed here automatically by Leto channels. So I'm going to show you where those occur on the price chart here with the Leto channels indicator on it. Right here is where those dots appeared. Now those dots appeared when we went into our oversold level. When we crossed below these green dots, that's oversold. If we cross above the red dots, we're overbought. And you can see right here that occurred. And that's why we have the red diamonds appearing there. So we're oversold. You would never want to sell when the market is at its historical maximum. That would be not a wise move. So we're expecting once we're oversold, we want to buy a breakout above that as we revert back to the mean. And that's exactly what happened here. Great trade was put on by the lion. Now, there are some other trades here that occurred. Oh, one thing let me point out. Leto Channels also produces these green histogram bars and the red histogram bars. And that is what we call the tendency histogram. All you got to do is think about it like the market tends to be in green. It tends to be above this moving average during this time of day. So over the history of this chart between roughly 1007 up until this point, which is 1123, we have green histogram bars printing. And that means that over the history of this chart, the market is above the moving average during that time of day on average. Red histogram bars mean the opposite. So between this time of day and this time of day, market is usually below the moving average. So that's really good. It gives you a little bit of a statistical edge. If you wanted to, you can use the histogram bars as a prediction of direction, right? And you could have actually gone short on a breakdown below that extension 62 dot. You could have gone short here, exited out here for a nice little profit. That is a secondary trade. It's a little riskier. That was a $550 winner, but it definitely is possible. A primary trade, the best trade that you're going to find out there is when prices oversold, the entry dot is also in oversold territory, or at least below the moving average, like this one is. And we go and we buy at that price when we break out. What you've got here this whole time is a rejection of this low. Market goes down crazy, crazy, crazy. We don't know where the bottom is, right? We find some support right at that level. The market retraces a little bit. The market makes another run to that level, and it just can't move below it. It starts oscillating, oscillating. It doesn't go lower. It goes higher. It goes higher. And we find now the market has retreated. It stopped its advance, and now it's in a bullish mode. And that price at this low is the bottom. It's the bottom is put in. Now we want to scalp away from that bottom. We want to buy the market, and that's what the lion gives us today. Let's take a look. We did another another trade, lion trade occurred here on copper, although it's not as pretty in that I've decided I'm going to trade the system between 9 and 11. So the red background, it's an indicator I've got on there that colors the background. The red area is before 9 o'clock, and the red area is after 11 o'clock. So, but before I started that 9 o'clock thing, I saw this huge move in copper. Very, very large pronounced move. You can see we went way into oversold territory. We're far below the historical maximum distance. This is where the market usually maxed out, or where it had maxed out. We were far below that. So I'm looking for a retrace. Now, the number of risk, the amount of dollars risk here is $2,300. Copper from this point down to this point is a $2,300 risk. And I can see that based on looking at the very bottom of this chart, bottom right chart. Extension 62 shows us the risk. That's the 2375 that's showing there. So it automatically shows us that. So it's a very high risk trade in that sense, in the distance, but it's such an amazingly beautiful retracement back to the moving average. So I did actually go long here. I went long and I exited out at that level. You can see some of my entry markers here, but we went long right here and I exited out right at that level. So that was a $1,400 trade in copper. Another trade occurred shortly after that. Let's zoom in a little bit. Here we are in overbought area, right? We're above the red dots. We start seeing our red diamonds appearing, and we get a bottom put in. So we're going to go short when price breaks below that blue dot. Well, price breaks below that blue dot all the way over here. That's what this line shows us, is that it's from this dot forward to where it actually entered. So the entry didn't occur until here, and that's that price roughly right about there, and we exited just a couple of bars later, $800 gain. So that was a 3-minute trade, and we hit target right away. So that is how we're scalping the market. That's another good trade right there. Okay, now let's take a look. If you know any stock traders out there, we have got some really good trades occurring on Lion on the stocks. So now with stocks in the morning, we're seeing a lot more volatility at the open. So Leto Channels shows that. Leto Channels is showing that the volatility is quite big at the open. This is the historical minimum in Meta. This is the historical maximum during the first half hour of trading. We didn't come anywhere near that, so we really didn't have a trade here. Yeah, really didn't. We just flatlined. So let's go back. Now this is April 2nd. This is April 1st. We didn't really see anything exciting here either. The market just didn't hit our overbought, oversold levels. That's our first clue that we want to look for overbought, oversold levels. Okay, so here is an oversold level that we hit in Meta. Now we found a bottom here. We are oversold. Now what we want to do is we want to find the first extension 62 dot after that oversold level and go buy it. Now this one didn't print, and that's because the swing was so rapid. There's only 2 or 3 bars here between this swing bar and this red candle, so it didn't print an extension 62 dot there. This would have been obviously a great place to buy, right? But we didn't. It didn't print, but we did have a extension 62 dot print here, and had we gone long, that would have been from here roughly to here, and that's a $1.74 move in Meta from that entry point. So that would have been a good time. Again, look at this. Our tendency shows that this market tends to be above the 100 moving average. And that means we expect the market to move above the 100 moving average. Let's do one more in Meta, and then we'll take a look at, I've got the micro NASDAQ we want to look at. So here's one. We didn't really see anything. We got just oversold here, but we didn't have any extension 62 dot to work on. So this now is today's action in the micro NASDAQ. We did see a really good signal print, and that is right here. We went deeply oversold. That's our first condition. We're oversold. We look for the buy of the next dot that appears after we're in the oversold region, and that's that dot right here. Our risk is showing at $396 down from that high down to that low. We go on a long, we buy at a breakout of that dot, boom, we hit that dot and we're out just a few minutes later. 5 minutes later, we're out with a $242 gain. You can see that. So again, we went long at a breakout and we're out at that high level, extension 62 level. Now we're deeply overbought here. We go almost to the moving average. It's a low confidence trade. I wouldn't be too excited about it, but we also it didn't quite hit our extension level down here. Had we gone short right there, we would have taken, not made a profit for sure. I recommend once you're in profit here, really strongly consider going to a break-even trailing stop. What you want is the go, go, go trade. You want the trade that hits through this level and doesn't turn back. That's the trade you want, and they occur, and you can take a big advantage of those. All right, the YM is a similar story. The YM looks pretty similar to the micro NASDAQ. There was more to be had here, though. We do go into oversold level. There's a long distance to where we actually hit that entry point, which is right here. Now, that's kind of a risky trade for me because we're entering above the 100 moving average. But had we done it anyway, we would have been up for a huge $2,300 gain today. So, any of you energy traders out there, I'm happy to cover the natural gas and crude and heating oil and gasoline markets. There are trades in all of them. But let's take a look at this one. We really don't see an oversold area until we get down to here. Then there really isn't much. The first dot we run into is right here. The first swing point would have been a great trade. It would have been risky for me because we are in overbought already. We're above the 100. The tendency histogram is down, but anyway, it is following most of the system rules, and that would have been a gain at 240. There's other better trades. Here we're overbought. We get our red diamonds printing. We could technically have gone short right here and exited right there for a $280 gain. Let's take a look at some cryptocurrencies. Now, not everybody realizes that NinjaTrader has a free cryptocurrency data feed from Coinbase, so feel free to connect to that. But if you're following the crypto markets, they have just been spectacular with trading opportunities. So here's one. We had a short setup right at the beginning, right at 9 o'clock. This is Dogecoin, the crazy Dogecoin that Elon Musk made a mint off of the other couple years ago. We are overbought at this area. We look for the touch of the next blue sell dot, which happens right here. We're short here, and we're just going to go down to where it targets is hit. That's unfortunately, it's kind of small. It's 10 ticks in Doge, which is tiny, so I can't give you the exact dollar amount. But obviously, you'd be buying several thousand tokens. But we do hit target here. That's the good sell signal. We hit overbought again up here. We're looking for a place where the sell signal occurs. And this is actually it right here, this blue dot. We go short when price hits it. Now we take some heat. If you were to hold on to it, we took some heat, but we didn't get stopped out. The market, let's see if we come close, we come very close, and it really never hits it, but we do come close to that target. That target was right here, and it doesn't quite hit it. We're kind of outside of our trading range after 11 o'clock. But the initial stop on this trade would have been all the way up here, and the market hasn't hit that either. All right, so let's take a look at Solana. Now, Solana is another cryptocurrency, and let's take a look back at what happened today. Okay, so we see an overbought area early in the day. Let's see, overbought right up here. We hit our entry right at that time, and we just ride it down to where we hit our target, which is going to be right around here somewhere. That's a 52-cent move in Solana. Um, okay, we are deeply overbought here. We could go short. That's a valid entry. So if we went short right here, we took a little bit of heat, it came down, and we're out of time for the day. We never hit our stop loss. This is a pretty significant stop, though, so it's a little riskier. $8 stop in Solana, probably something to consider when you're entering that trade. All right, so we looked at a bunch of markets here. I'm so happy that you joined me today. We are again super excited to have brought you this trading system. We could scalp very profitably short-term time frames with confidence, knowing that we are overbought or oversold, an accurate measurement, and when we break through prior support resistance. This is how professional traders are making money every day. So thanks again for joining me. Thanks for taking a look at the lion with me, and look forward to hearing from you. Leave a question or a comment in our chat below. Happy to talk to you. Thanks again.